Hey guys, Money of Yumi here, where I talk about anything and everything related to money and how to grow your wealth. I just wanted to make a quick video updating you guys on why I'm still buying stocks during this time of extreme volatility and uncertainty. But let me first address recession. I think we're kind of in a recession, like a mild to medium recession. I'm not sure about you guys, but I'm feeling it here in the US, and we just need to wait for the US Fed's numbers to make it official. But look here. Most Wall Street economists have been pointing to an increased chance of negative growth ahead, but figured it won't come until at least 2023, which I think it's complete bullshit. However, the Atlantis Fed's GDP Now measure, which tracks economic data in real time and adjusts continuously, sees second quarter output contracting by 2.1%, coupled with the first quarter's decline of 1.6% that would fit the technical definition of recession. And you know, the only way the Feds can combat inflation right now is with a deflation through a recession, because that way people stop spending as much money and then there's less demand for goods and services, and then prices will start to fall. Which is why I've been saying that inflation is kind of like a double-edged sword, because I feel that a lot of mom and pop stores will close down if a recession happens because they don't have enough cash to sustain their business in times of distress. Big companies, on the other hand, they can operate at a loss for a longer period of time, not only because they have more cash on hand, but because it's easier for them to borrow money from the banks. And second, the stock market is in bear territory, right? Let's be real about that. The Nasdaq, Dow Jones, S&P 500, they're all down. And then you see articles like this. S&P 500 posts worst first half since 1970. Nasdaq falls more than 1% to end the quarter. And I don't know about you, but this makes me excited because all I see is opportunity. Some stocks are lower than their prices like 4, 5, or even 6 years ago, which is insane to think about. And I want you to take a look at this chart. We had 11 years of bull market since 2009. The 2020 crash fell too much too quickly, and then it bounced back up way too fast. So in my personal opinion, the 2022 crash is much needed to bring those inflated numbers down. And if history repeats itself, which it normally does, then we're gonna have more bull market years than bear market years. I want you to take a look at this. The average bull market period lasted 4.5 years with an average cumulative total return of 153.7%, while the average bear market period lasted 11.3 months with an average cumulative loss of negative 32.1%. So this is why even if your stocks are down, but the fundamentals are solid, then you shouldn't be too worried. And third, do I think the stock market is near or at the bottom? Honestly, no. I feel like we still have about 6 months to 12 months of pain ahead of us just because the real estate market hasn't been hit hard yet. Home sales have been declining, but home prices have not gone down significantly despite higher interest rates. And we need home prices to come down to some sort of normalcy. Look at this. Existing home sales fell 3.4% in May. Median sale prices surpasses $400,000 for the first time. Existing home sales declined for the fourth straight month to a seasonally adjusted annual rate of 5.41 million. Sales were down 3.4% from April and 8.6% from 1 year ago. At $407,600, the median existing home sales price exceeded $400,000 for the first time and represents a 14.8% increase from 1 year ago. A 10 to 20% increase in a year? That's not normal. Typically, real estate increases like 3% a year. And the other question is, do I think that we're gonna have a property crash like we did in 2008? No, especially when cooling measures were introduced to prevent that sort of problem from happening again, where people were over leveraging, and if they somehow lost their jobs, they couldn't pay the mortgage, they would have to foreclose on their homes or auction it off. And right now, many homeowners have more equity locked up in their homes. And like in Singapore, for example, the down payment went from 20% to 25%, and TDSR, total debt servicing ratio, was introduced in 2013, so you couldn't borrow more money than what you make. So what I feel is going to happen is it'll be more stagnant or a dip rather than a crash. But if a real estate crash does happen, like, come on, give it to me, I'll take it. And let me tell you something that is not obvious for most people. Remember I said last year that freight costs have gone up insanely high. Like pre-COVID, a container from China cost about like $4,000, $5,000 in shipping fees to the US. And at the peak of the Coconut pandemic, there was a container shortage, so the price shot to a high of $24,000. That's like 5 times more expensive. And I also mentioned that consumers will feel the pinch because the cost would then be transferred to the consumers, and it did, right? Take, for example, my comforter duvet cover from Pottery Barn. I got it for less than $250 in 2019, and right now it costs $339. That's a 35% increase. Well, the good news is the freight costs are finally coming down. It's about like $9,000-ish right now, which is still double of what it was pre-COVID, but it's 60% lower from the peak. And lumber prices are also coming down, which is great for home builders. So I'm prepared for the worst. The possibility it might get much worse from where we are today, but I'm planning for the future when the market bounces back. Does that make sense? This is why I feel this is the best year for you to cash up, get a side hustle, make as much money as you can, save that money, and then invest as much as you can. That's the key. That's why I plan on putting 6 figures into the stock market this year, because I feel that 6 figures will turn into 7 figures or even 8 figures, and it's time to add another 0 to your net worth. With that said, I hope you guys kind of get to know what I'm thinking and why I'm still buying stocks, even though it may fall 10, 20, or even 50% from the price I bought at. I'm not going all in at once, you know. I'm trying to pace myself and only buying stocks that I feel are on a huge discount right now. Take PayPal, for example. I bought a small position at 90, and then it dropped to 80. I bought again, and now it dropped to $70, and I bought more. If it keeps dropping, I'll keep buying because then I can lower my cost basis, because being in the market for so long, I can tell you that trying to time the market is really hard. Sometimes you get lucky, but most times you don't. So I try to stick with a strategy that works best for me, and that is to buy the dip. And some stocks are even trading at a market cap where it's close to the amount of cash that they're holding, which is insane to think about how bearish investors are right now. And at the end of the day, I've got time on my side. And remember, it's not about timing the market, but about how much time you've been in the market. Take a look at Coca-Cola stock, for example, and you'll know what I'm talking about. That's why I feel this is a good time for you to buy stocks you love for the long term. Alright guys, thank you so much for watching. Don't forget to hit the like button, subscribe to my channel, and ring the bell icon so you get notified whenever I post a new video. I'll see you again next time.